After sharing their 2024 result, the share of Booking jumped 5% on market close, and then after the earning call, it declined a little and now it's only up 2%. You will understand everything in this video, why it's quite good result and what also may scare a bit those investors and why the stock didn't jump more after such good earnings, okay? So the first thing to see is the fourth quarter 2024 highlights. The room night grew by 13% compared to 2023. Gross booking grew by 17% and revenue grew by 14%, which is excellent. Booking is in my portfolio, and as a quality investor, I'm looking for stocks that can grow their revenue more than 8% per year and net income more than 10-12% per year, and here it's here. Okay, for the full year 2024, you have the room grew by 9%, gross booking by 10%, and revenue by 11%, which is very good. And the net income, the adjusted net income, adjusted earning per share grew by 23%, which is very good. Okay, you can have it here. A 23% gross EPS, a 13% growth in net cash provided by operating activity, 13% growth of free cash flow. The EPS is way higher than the other one because Booking is known to do very big buybacks. They did again 6 billion or 7 billion buybacks, so it was very good. Here as well, margin expansion. Okay, the adjusted EBITDA margin is up to 33.8% compared to 30.6% in Q4 2023. So higher margins. Okay, the total operating expense decreased by 10%. That's why the margin got better. And adjusted fixed operating expenses increased 9%, slower than the 14% growth in revenue. So they decrease the operating expenses, so better margin, plus the fixed margin, they increase less fast than the revenue. So again, higher margins. For 2025, okay, the board authorized a program to repurchase up to an additional $20 billion of our common stock. Last year, it was around between 6 and 7 billion. I think it was here $7.7 billion. Next year, they plan to maybe do up to 20 billion, which is huge. It's like more than double. It's almost triple that what they did last year. But keep in mind is up to. So it doesn't mean it will be 20 billion. So we may have a bad surprise during the year if they don't do 20 billion. But remember, it's up to 20 billion. So we will see where it will go. But it's still, they show that they want to continue buying share, and then still think that probably the stock, it's at low valuation now if they buy that much shares. When we go in the numbers, something here we can see that merchant revenue increased while the agency revenue decreased. And it's a good news because it's better for Booking to have merchant revenues than agency revenue. Because merchant revenue is you book your hotel room or your service, whatever, on Booking platform, and you pay to Booking, and then Booking give the money to the hotel, the rental car, whatever, and keep a commission. But when it's agency revenue, Booking don't get the money. It's like you pay at the hotel, and then the hotel pays a commission to Booking, and it can cause some problem in some country with some hotels and so on. So it's good that these agency revenues are decreasing and the merchant revenues are increasing. This is very good. You can, here I put it in red, pink. The advertising and other revenues are a bit decreasing, okay? They are not decreasing, but they're increasing very slowly. So could be nice to understand why they're not growing a bit faster. And also if, I don't know, it can be good to see if they still plan to continue to grow it, because the growth is not fast enough here, and it's a very high margin area, advertising. So it can be nice if it can continue to increase a bit more, because yeah, the growth is a bit slow for now on it. When it comes to operating income, you can see that you had a very good growth here, and a very good growth in margins. Here we have a margin of 27% in 2023. 2024 we have a margin of 32%, which is very good. Okay, it's something very good. I'm looking for company with 15% plus operating margin. Here we are 30%, so top of the top, very good. In the cash flow statement, you can see, okay, payment of repurchased common stock. 2023, it was 10 billion, here 6.5 billion, plus a dividend of 1.174. So for the shareholders, it's a total of 7.56, almost $7 billion distributed, so it's good. They plan to grow the dividend by 10% next year, approximately. So it means that apparently they will more focus on repurchase stocks, and it's something that I like. I prefer this because you have less tax when it's stock repurchasing, while with dividend you have this 30% withholding tax, so maybe you have some fiscal plan and whatever. But for me, I don't have, so I prefer that they repurchase their own stocks that pay dividend. I think it's the last thing that I noted from here. Then I put the transcript in ChatGPT and to ask for the guidance. Okay, I was too lazy to listen to everything, to read everything. I just wanted to know the guidance from the transcript, and that's the reason also why the stock didn't continue to grow. It was 5% growth after the earnings, and then after the conference call, it was only 2% growth anymore. The reason is they expect a gross booking of 8%. So they say at least, but still, it's less good than before. A revenue growth at least 8%, okay, which is lower than what we had here. Remember here, we had grew 9%, gross booking 10%, revenue 11%. So it's less growth, okay, it's around 8%. 8% is close to my limit, okay, if to buy growth stock. And adjusted EPS, 15% growth. Here we had 23% growth, so 15%. I'm not saying it's low, but it's still very good, but it's less growth than what we had new in this year, okay? So this is something we need to keep in mind. The CapEx still expected to be 2% of revenues. This doesn't move a lot, okay? And that's kind of all. They expect still to do the share buybacks of almost 20 billion, so we'll see how it goes. But yeah, it's on one hand, it's very strong result from last year, but the guidance for next year, they are still good, okay? We still have good numbers, don't get me wrong on this, but I guess it's less than what people expected. And we were expecting maybe to have some revenue grow more around 10% and some net income, I mean EPS, more around 20%. But 15 and 8% still very good, okay?